Friends, welcome back to my YouTube channel LS Academy. Today I am going to discuss a problem on retirement of a partner. Before starting the section, please like, share and subscribe my channel. Now let us discuss another question related to retirement of a partner. There are three partners, Ajay, Vijay and Vinay, who are sharing the profit and ratios in the ratio of 5:3:2 and their balance sheet is as liabilities. We have creditors, bills payable, general reserve and capital of three partners, that is Ajay, Vijay, Vinay. And in asset side we have bank, debtors, stock, plant and machinery, furniture, building and goodwill. Now let's discuss with the adjustment. Vijay retired from the business on following conditions. So among these three parties, the last party had moved out of the business, retired from the business. Goodwill of the firm is valued at 50,000. Here in the balance sheet, we have 10,000 opening goodwill, and here in adjustments we have 50,000. So we need to deduct 50,000 minus 10,000. So we'll get 40,000. That 40,000 we need to divide to this three parties in the capital account. Next we have appreciate building by 20%. So the value of building is 55,000. 55,000 into 20% we need to calculate. Next we have create a provisions for bad debts at 1,000. So debtors bad debts is 1,000. Next, depreciate plant and machinery by 10%. The value of plant and machinery is decreased by 10%. It means that 50,000 into 10% we need to calculate. Next is Ajay and Vijay brings in cash 24,500 and 19,300 towards additional capital to pay the amount due to the retiring partner Vinay. So as Vinay is retiring out of the business, so the business need to make payment to the retiring partner. So in order to make payment for that retiring partner, the existing partner Ajay and Vijay, they bought in cash 24,500 and 19,300. Now prepare necessary ledger accounts and balance sheet of a new firm. So as the Ajay and Vijay is making payment to the retiring partner, we need not to prepare loan account because dues related to Vinay are being paid. That's the reason we are not required to prepare loan account. Now let's start the problem. The first account is revaluation account. So let's see with the adjustments. Appreciate building by 20%. The value of building is 55,000. So when the value of asset is being increased, then we need to record in credit side of revaluation account as buy buildings 55,000 into 20%. So if we calculate in the calc, we'll get the answer 55,000 into 20%. We'll get 11,000. Next we have create a provision for bad debts at 1,000. So value of debtors is being reduced. So we need to record on debit side of revaluation account to provision for bad debts. That is 1,000. They have given directly. Next, depreciate plant and machinery by 10%. So value of plant and machinery is 50,000. As value of asset is decreased, we need to record on debit side to plant and machinery 50,000 into 10%. So we'll get 5,000. We don't have any other entries. Now let's close this revaluation account. So 1,000 plus 5, 6,000 in debit side and 11,000 on credit side. Higher amount is 11,000. We need to record in both the columns. So higher amount minus lower amount. Higher amount is 11,000 minus 6,000 will get 5,000. So as debit side is less, we need to write this 5,000 in debit side of revaluation account as to profit carry down to capital account. And this 5,000 should be given to the three parties in their ratio. So Ajay, what is their sharing ratio? 5:3:2. So Ajay equals to 5,000 into 5 by 10, because 5 plus 3 plus 2 will get 10. Vijay equals to 5,000 into 3 by 10, and Vinay equals to 5,000 into 2 by 10. If we calculate 5,000 into 5 divided by 10, we'll get 2,500 of Ajay's, and Vijay's 5,000 into 3 divided by 10, we'll get 1,500, and Vinay's is 5,000 into 2 divided by 10, we'll get 1,000. Now let's prepare capital account. So it always start with the opening balance to by balance brought down. Let's see what is the opening balance. Ajay 60,000, Vijay 40,000, and Vinay 30,000. So Ajay is 60,000, Vijay is 40,000, and Vinay is 30,000. Next is revaluation profit. By revaluation profit brought down, 2,500 Ajay's, 1,500 Vijay, and 1,000 Vinay's. Next is by general reserve account. We have 24,000 general reserve. 24,000 into Ajay's ratio is 5 by 10, Vijay is 3 by 10, and Vinay is 2 by 10 ratio. So 24,000 into 5 divided by 10, we'll get 12,000. 24,000 into 3 divided by 10, we'll get 7,200. And last, 24,000 into 2 divided by 10, we'll get 4,800. Next, by goodwill account. So here in adjustment we have 50,000, and in opening balance we have 10,000. So we need to deduct 50,000 minus 10,000. We'll get 40,000. That 40,000 we need to divide in their ratio, that is 5:3:2. So if we calculate 40,000 into 5 divided by 10, we'll get 20,000. Next, 40,000 into 3 divided by 10, we'll get 12,000. And finally 40,000 into 2 divided by 10, we'll get 8,000. Next we have Ajay and Vijay brings in cash 24,500 and 19,300 towards additional capital to make the due payment to the retiring partner. So as they are bringing the cash, we need to write as by cash account 24,500 Ajay and 19,300 Vinay. So this both are making payment due of Vinay. So let's calculate. $24,500 plus $19,300 will get $43,800. This $43,800 is being paid to Vinay because he is moving out of the business to cash account. Okay, now let's calculate the total of 3 accounts. First one, we have Ajay's 60,000 plus 2,500 plus 12,000 plus 20,000 plus 2,500. We'll get 1,20,000 and we'll calculate Vijay's and Vinay's. After doing total of Vijay, we got 80,000 and Vinay we got 43,800. So here Vinay account is tallied because we have debit side 43,800 and total we got from credit side 43,800. Now we need to record the balance carried down. We don't have anything related to Ajay and Vijay. The same amount will record here, 1,19,000 and 80,000. Now let's prepare the cash account. It starts with opening balance to balance brought down. We have 6,000. Here in capital account cash related word, here we have by cash 24,500 and 19,300 additional capital by existing partners to Ajay capital account and Vijay capital account. 24,500 and 19,300. We don't have any other amounts. Here in debit side we have 43,800. So by Vinay account 43,800. Now let's do the total of debit. If we add 6,000 plus 24,500 plus 19,300, we got 49,800 minus 43,800. 49,800 minus 43,800 will get 6,000. So 49,800 in total columns, 6,000 is balance. So by balance carry down 6,000. Now let's prepare goodwill account. We have opening balance related to the goodwill. So to balance brought down, we have 10,000. Here we have divided the goodwill to 3 parties. We got 20,000, 12, 8,000. So this is on credit. We need to record debit side of account to Ajay, Vijay to Vinay. 20,000, 12,000, 8,000. We don't have any other amount on credit side. Let's do the total. If we add all these amounts, we'll get 50,000. So this is a balance carry down amount. Now let's prepare balance sheet. So we'll start with asset side. Bank, we have prepared the account. So carry down amount we have is 6,000, that we need to record. Bank 6,000. And next we have debtors 40,000 and we have adjustment 1,000. Debtors 40,000 minus 1,000, that is 39,000. Next we have stock 30,000. We don't have any adjustment related to stock. Next we have plant and machinery 50,000 and depreciated by 10%. Plant and machinery 50,000 minus 10% is 5,000. We'll get 45,000. Next we have furniture 10,000. We don't have any adjustment related to furniture. Furniture is 10,000. Next we have buildings 55,000. So here building value is appreciated by 20%. So buildings 55,000 plus 55 into 20% will get 11,000. So total is 60,000, 66,000 will get. Next we have goodwill. So we have prepared the goodwill account. Balance carried amount is 50,000. That we need to record here. Goodwill 50,000. And in liability side we have creditors 20,000, bills payable 26,000. Creditors 20,000, bills payable 26,000. Next capital we need to take from capital account Ajay's and Vijay's 1,19,000 and 80,000. And last we have outstanding expenses 1,000. Now let's do the total of both the sides. After adding all the amounts in liability side, we got 2,46,000. Now let's see with the asset side. After adding all these amounts in asset side, we got 2,46,000. So both the sides we got same answer. The balance sheet is tallied. Thank you for watching. Please like, share and subscribe my channel.